Okay, hi, good evening, everyone. The time now is 7:30, so I think we'll start right on time. Thank you for joining me today for this session of the Daily Leverage Certificates DLCs webinar with Tiger Brokers. Thank you to Tiger Brokers also for inviting me to come and give this regular sort of webinar session to highlight some of the latest developments and latest launches that we have on the DLC shelf. Okay, so just we just want to start. Today we'll be focusing on the DLCs on the Straits Times Index. So this is one of the latest launch that we have listed or launched on SGX securities market. The DLCs 2 times, 5 times, and 7 times DLCs on the STI index. All right, so the Daily Leverage Certificates DLCs for short is a product that is listed and traded on SGX securities market, and it's issued by Society General, right? So that's where I come into play. That's where I come into the picture. So I am Marcus from the Society General. I am from the cross-asset listed distribution team. So we manage and we help to build the awareness of these daily leverage certificates. We list it on SGX, and then thereafter we try and promote the education as well as the awareness of these DLCs here on SGX. All right, and how investors can use it to leverage their investment return or even hedge their investment portfolio. All right, so just very quickly in today's session, very quickly I'll go through what the STI DLCs can do for investors. So to highlight to you what are the different aspects of the STI DLCs that you have to be aware of, what kind of potential return you're looking at in terms of the leverage factor. Then the second part is I'll go back to the basics of daily leverage certificates. For those who are not too familiar with what DLCs are, then please stay tuned for the middle section where I'll share more about the basics of how the DLCs work and how investors can use them as part of their portfolio. All right, and then last part, I want to go in a bit of a practical series where I want to show you guys the DLC website that we have, dlc.socgen.com. So that's the website where you will find all the information that you need to trade the DLCs, all right? So all the educational information are there, as well as the trading, as well as the terms of the products all found on that website. So we have many different tools as well that you can use to aid your trading of the DLCs. So I would like to run through that as well as the last part of my presentation. All right, so these 3 parts today, and we'll jump right into the first part of this presentation. But first, I think I just wanted to share with you guys the few basics, because you have to understand a bit of the basics of the DLCs before we go into the STI DLCs, which is the focus of today's presentation. All right, so the DLCs, daily leverage certificates, it is a leverage product. It gives you a fixed daily leverage of the underlying performance. All right, so it's a constant leverage product. It was first launched in Europe, and it was very successful in Europe, and therefore SocGen decided to bring it over to Asia, and SGX is the first exchange venue that we have listed the DLCs. All right, so the DLCs come in the form of a long and short DLC, so it allows you the flexibility to trade both long and short directions for both bull and bear markets. So that's where the flexibility comes in. And then there is a leverage factor, the fixed daily leverage factor. So we have 2 times, and then we have 5 times and 7 times as well. All right, for both long and short directions. And this DLC is a derivative instrument, which means that it's linked to an underlying asset. It can be an index or it can be a single stock. All right, so it will track the underlying performance multiplied by the leverage factor. All right, and it is listed and traded on SGX securities market. So you can trade it just like a stock through your regular stock brokerage account, whether it's your Poems account, your Tiger Brokers account, whichever brokerage account that you use, you can find the DLCs on them and you can trade them like as though you would trade a DBS stock, right? Okay, so it's not a futures, not an option, even though it's a derivative, but so it allows you to trade easily through your regular stock brokerage account. Okay, and as it is an issued product by Society General, we are also there to provide continuous liquidity throughout the trading day, as long as the underlying exchange is open. All right, so we are the designated market maker, DMM for short. We are the issuer and the DMM, and we are obligated by the exchange, SGX, to provide liquidity throughout the trading day for investors to buy and sell these DLCs. All right, so that's in a nutshell a few key points about what the DLCs are. You can tell that it's a leverage trading instrument, which is only meant for, which means that you should only trade it for a short-term basis and not a buy and hold product. And it is able to give you that fixed daily leverage. All right, so many investors are also confused by the word daily, right? Daily, sometimes there's a misconception or misinformation that, I can only hold this DLC for 1 day. This is called daily leverage certificates. Okay, that's not true, all right? This daily refers to the fixed daily leverage that you're provided, that 5 times or that 7 times fixed daily leverage. All right, investors, we've seen investors hold it for a few days or even a few weeks, but definitely you shouldn't be holding this DLC for the long term. All right, so it is a leverage trading instrument for the short-term trading, and it is a SIP product, which means that only people who are SIP qualified, specified investment products qualified, are able to trade these DLCs. So do check with your broker if you are SIP qualified, and then thereafter you'll be able to trade the DLCs. All right, and it is listed and traded on SGX securities market. So you don't have to go into a foreign exchange, etc. You can access the foreign markets because we do list DLCs on Hong Kong underlyings. You can access a foreign underlying from the comfort of a local stock exchange, our SGX. And since you're familiar with all the different nuances of the SGX market, you won't have to tackle all the different kind of like microstructure and difficulties with navigating around the Hong Kong exchange sort of fees and the microstructure and the time zone, etc. So, and the currency as well. So we try to do that, give you the benefit of investors the benefit of getting exposure to foreign markets from the comfort of SGX. All right, so that's in a nutshell the DLCs, and we have been around for the last 5 years. So the DLCs was first launched on SGX in 2017, and in a blink of an eye, it's been 5 years. Just this month, we are celebrating our 5-year anniversary for the DLCs. So we're celebrating 5 years of DLCs, starting off in 2017, and now with just 10 DLCs in 2017, but now we have grown to a shelf of over 240 DLCs listed on SGX. All right, so this is amazing. For the DLC shelf, we have really grown multiple folds over the years, the last 5 years. And we've expanded the range from just index underlyings to now single stock underlyings. And in its latest launch, in March and April itself, we launched DLCs on the US benchmark indices, your S&P 500 index, as well as your NASDAQ 100 index. So this was covered in my last session with Tiger Brokers. Hope you managed to catch that, but I'm sure you can watch the replay if you have not. So these DLCs on the US indices it's quite a novel product that we have launched. And because it allows you to be able to gain exposure to the US markets during Asian hours, all right? And that is quite a novel feature. So it allows you to be able to get in early into the US market, ahead, during Asian hours, getting ahead of the US Open. Also be able to hedge your positions overnight US market hours. And that gives people some benefits, right? Because of if there's a case of a high impact news during Asian hours, you can take on some exposure to the US market indices, or even use it to hedge your US stock portfolio. All right, but total 242 DLCs as of today, when I last checked. We have over 7 indices, benchmark indices, covering seven benchmark indices, as well as over 60 single stocks across both Singapore and Hong Kong market. All right, so we mainly cover both the Hong Kong market and Singapore market for both indices and single stocks. For the US market, currently we only have the benchmark indices, the S&P 500, as well as the NASDAQ 100. But in terms of the single stock realm, there is already a lot for you to choose from. You name it, all the big tech giants, we do have them. We do have 5 times long and short DLCs listed on them, as well as your 3 Singapore banks in terms of the local space, as well as your main STI constituent stocks. We do have 5 times long and short DLCs on them as well. All right, so it's quite a large range, and hopefully you're able to cater to your target exposure. You're able to find the DLC that you wish to trade in our shelf. If not, feel free to just drop us a ping on our website, etc. We'll be able to see, let us know what kind of underlyings you're looking for, and we can assess whether we are able to launch the DLCs on these underlying stocks or indices. All right, and now to the highlight of today's session is on the STI DLC. So we're very proud to share that we have launched this product, and it is quite novel in the sense that there is no other listed product on SGX securities market that gives you that kind of leverage, the amount of leverage on the STI index, as well as it gives you a long and short direction of the STI index. All right, STI, we're all very familiar with it. It's our local benchmark index. It's a market cap weighted index, and it covers the top 30 companies listed on SGX securities market. All right, so I think you guys are all familiar with the STI. I should not elaborate too much about the STI constituents or the index. Straits Times Index, you've heard it on the news, etc. You've heard it in part of your portfolio, and many financial blogs also write about it. About the ETFs as well. The ETFs, the STI ETFs are very popular, but the really novel part about this DLCs is the amount of leverage that we can provide on the STI index: 2 times, 5 times, and 7 times to cater to different risk appetites, as well as long short directions over here. So you can see we listed 1 long and short DLC for every single leverage factor. The 2 times long is at CUGW. That's the stock code for the DLC. So if you go into your broker platform, you can search for CUGW. You'll be able to retrieve this STI 2 times long DLC. All right. And then the leverage factor you can see over there, as well as the issue price. So the issue price is an arbitrary number that we come up with at the first point of the issuance. So it starts off at 150, and then as it goes on every day, you will get that 2 times performance every day, and so on and so forth, all the way on a daily basis. And the price will change as the DLC gains or loses its value based on the STI underlying index movement. All right, we listed this on 1st of June. So we're very excited to share about these STI DLCs. And these DLCs have a 3-year expiry. So, you know, it is a long-dated instrument. You don't have to worry too much about the expiry. You can just trade it. And also, the 3-year long-dated expiry means that, you know, you don't have to worry too much about the expiry. If you could do open-ended, we wish you could do open-ended, but based on SGX rules, it has to be a maximum of 3-year expiry. Therefore, you know, we do have a long-dated expiry of 3 years. So don't worry, even if you are, you know, it comes fast forward 3 years, you know, it's almost close to the expiry date already, and you just happen to trade the STI DLCs. It doesn't matter, because every day, all the way up to the valuation date, which is 1 day before the expiry date, you'll still be promised the performance of the DLC, or that 2 times or 5 times performance of the daily performance of the underlying index every day, all the way until the valuation date, which is 1 day before the expiry date. All right, and then on expiry date, whatever the residual value or whatever the value of the DLC is on the valuation date will be cash settled to investors through CDP. All right, so if the DLC ends up over the next 3 years and ends up at a value of $2, for example, then this $2 per DLC will be cash settled to all the holders, and we'll do it through CDP. All right, SGX CDP. Okay, so this 2 times, 5 times, and 7 times leverage, it sounds like a lot of leverage, but we should take note that STI is not that volatile an index. I think the average move on the STI is definitely less than 1% a day. Therefore, you know, you can use that 5 times or 7 times leverage to help you to enhance your return on the STI index, because that's the point, that's the beauty of DLCs, right? Or leverage in that sense. You can use the DLCs to amplify your performance. If you have a view on the STI, whether you are bullish on the STI, then you'll buy the long STI DLC to be able to enhance your return. If you have a bearish view and you think that STI is going to correct, like in the past few weeks, you can buy the short 5 times or 7 times STI, or even the 2 times STI DLC, to be able to express your view and be able to capitalize on this short-term trend on the STI index. All right, so you can trade both long and short directions. And remember that, you know, you have a long DLC and a short DLC. So you always buy the long DLC if you're bullish, or you buy the short DLC if you're bearish on the underlying index. All right, so these STI DLCs are all listed on SGX Securities Market. Look for the stock code and you'll be able to retrieve the DLC, and they're all traded in Singapore dollars. All right. Okay, so this is a quick view of the 6 STI DLCs that we launched in June. And we hope that, you know, you'll be able to cater to all different kinds of investors out there with different risk appetites. Hopefully, you know, you'll be able to, for those who are a bit more conservative and want to hold a bit longer, you might want to consider the 2 times DLC. But those who are looking for maybe intraday trade or a few days trade or swing trade, you might look at the 5 times or 7 times DLC. And we'll look at some of these examples later, how you can use the 2 times, the DLCs for intraday trade or swing trade, or even to hedge your investment portfolio. All right. And so the STI DLCs, we did a very quick simulation, because I mentioned to you just now that the STI DLC is not that volatile and sort of an index. It doesn't move that much as your US benchmark indices, or even your Hang Seng index, which can be quite volatile. The STI is relatively more stable, and it doesn't move that much within just 1 day. It might move quite a bit within a period of time, but definitely on a daily basis, it doesn't move that much, like 4 or 5%. It only moves maybe probably at less than 1% or even 1 to 2%. All right, so we did a bit of a historical simulation of the performance and how the DLCs would have performed if, you know, you had bought a STI DLC 2 times, 5 times, or 7 times DLC. All right, so naturally, the simulation was as expected. the performance. With a higher leverage and longer holding period, the potential gains and losses are magnified as well, right? And including the compounding effect on the performance of the DLC. And I'll touch on the compounding effect later when I touch on when I go to the second part of my presentation about the basic features as well as the product features of these DLCs. All right, you can see on the table over here, you can see that on the leftmost column, you can see there's a 1 times FTSE STI. So that is just the STI's normal performance. And then you can see that 2 times STI, 5 times STI, and 7 times STI simulated performance over the last 3 years. All right, so we've done a simulation backtesting it 3 years for 3 years, and we are heartened to see that the results are as expected in terms of the STI. You can see that it performed on an average basis 0.5% on a close-to-close basis for 1 day holding period. And then the STI, 2 times STI DLCs provided about 0.9 to 1%. So that's about 2 times that of the normal STI DLC, whereas the 5 times and 7 times also roughly provided that 5 times and 7 times performance, right? 2.4% and 3.3%. And then the 1 week holding period, you can see also, if you held the DLC for 1 week, this STI, the normal STI index, performed about plus minus 1.6% on average in a 1 week holding period. The 2 times provided 3.2%, the 5 times provided 8%. All right, so that's exactly around the 5 times performance, and the 7 times STI provided about the 11.2%. All right, so that is slightly less than what the 7 times performance is because of the possibility of the compounding effect, and that's even more accentuated in the 1 month holding period. For the 1 times STI DLC, STI 1 times STI index, it's plus minus 3.6%, while the 2 times STI DLCs performed 7.2%, so that's exactly 2 times. The 5 times STI DLC provided 17.6%. All right, so that is slightly less than the 18% you would or 80% you expected on the DLC. And also on the STI DLC, UFC is minus 24%. Sorry, my head is blocking. So plus minus 24%, 7 times by 3.6 is about 25%, right? So the 7 times STI DLC provided only plus minus 24% return. So this is also a very important point that I'll highlight later, is that the compounding effect kicks in when you hold the DLCs for more than a day. All right, and in the longer holding period, in a 1 month holding period, you'll see that the performance will vary slightly, from the 7 times or the 2 times or the 5 times expected leverage of the DLC, because the leverage factor, the 2 times, 5 times, and 7 times, is only on a close-to-close basis. All right, so it provides you on a close-to-close basis 2 times, 5 times, or 7 times that of the daily performance of the STI index. So when you hold it over a longer period of time, the compounding effect will kick in, and that's also one of the reasons why we think that we say that the STI, the DLCs, should not be held for a very long period of time. All right, you can hold it for a day, a day, or a few days, or a few weeks, or even a month or two with the STI DLCs, the 2 times STI DLCs. But definitely, the higher leverage you go, the more you should not be holding these DLCs for a long period of time because of the compounding effect. All right, I'll elaborate a bit more on that later with some examples. But this simulation is just to show you how you can see that it does provide that 2 times, 5 times, and 7 times performance of the STI's daily performance using backtesting historical data. All right, and just a very quick one on the STI. So the STI, I think we've seen quite a big downtrend since the start of the year. All right, it fell from 3,450 points all the way down to below 3,100 points. All right, so the STI was down maybe around like 10, 11%. Not yet a bear market. All right, I think the US has entered a bear market, technically speaking, minus 20%, while the STI is still halfway there. And we've seen a nice rebound after touching its low from 3,100 levels all the way back up to around the 3,200 levels. So it broke out of this tight trading range between 308 and 3150 just in a matter of like this last few days. And so it's just very timely. Now, it is quite an exciting moment to see, will this rebound sustain, or are we still going back into a downtrend? All right, will the 3,200 level act as a huge resistance for the STI? And I think we have FOMC coming out in the next 2 days. So it is going to be very interesting whether, this STI is going to stay above this 3,150 level, which it broke out of. All right, so it broke out just a few days ago of 3,150 level. Back tested it a bit. You see that red candle over there, and then now it has shot up to closer to the 3,200 level. All right, so right now, the immediate sort of target, I guess, would be the 100-day moving average, which is at the 3,238, 239 point level. So we'll see whether the STI can reach that 100-day moving average, simple moving average, while the support now currently stands at the 3,150 level after it broke out of it just a few days ago. All right, so whether if it goes back down below 3,150 level, then it becomes a more bearish scenario. All right, so whether you are a bullish investor, you think you'll go up to 3,200 level, then you can utilize some of the STI DLCs, the 2 times, 5 times, or 7 times STI DLCs. But if you think that it is going to correct and it's going to come back down to 3,150 level or even go below 3,150 level, then you can utilize the 2 times, 5 times, and 7 times short STI DLCs to be able to express your view. All right. So the STI is a very interesting point now, and I think the next few days or maybe a few weeks will be very interesting to see where the STI is heading. Are we in a new sort of bull trend, uptrend, or are we going to go back into the downtrend that we've seen in the last couple of months? All right. So that's where the STI is, and I think it's very interesting. You can find this chart as well on our website, dlc.socialgen.com, and you can annotate around it, draw the lines as well, and see the moving averages for this STI underlying index. Okay, so now I think I'll try to explain a bit of a DLC 101 about what the DLC can do for you using some of the STI examples. So reference to STI, so that you're better be able to appreciate, how the STI DLCs work and how it can help you to in your portfolio. Whether it's a tactical instrument that you use in a portfolio, or whether it's something that you want to buy and hold for the hedging purposes. So do listen as to how the DLCs work, because the important features such as the compounding effect, which I'll touch on in this section. All right, so going back to the basics about how the DLCs work. I mentioned that the DLCs are fixed daily leverage, so they give you that 2 times, 5 times, or 7 times leverage on a close-to-close basis every day on the underlying assets performance, daily performance. All right, so it's daily percentage performance of the underlying asset, which is the STI in that sense, times by the leverage factor, 2 times, 5 times, or 7 times, will equals to the daily percentage performance of the DLC. All right, so the STI, for example, is at 3,000 level on day 1, right? And then the next day on day 2, it moves up to 3,060 points. So there's a 2% gain on the STI index itself. What you will see on the DLC is that it'll give you that 5 times performance on the 2%, all right, on a percentage basis. So the DLC, the 5 times long STI DLC will move up by 10%. 2% times 5 is 10%, right? So you move up by 10%. All right, so it will rise in value by 10% on the long DLC, and correspondingly, because the losses are also magnified if you got the direction wrong, so the 5 times short STI DLC will fall in value by minus 10% similarly. All right, and conversely, if the STI instead was down by 2% on day 2, then you will see that on day 2, the STI long DLC will be down by 10%, while the 5 times short STI DLC will be up by 10%. Okay, it will rise in value by 10%. So that's why if you're bullish on the STI, you would buy the 5 times long STI DLC to express your view and make that gain. But if it comes true, or if you are bearish on the STI DLC, STI index, then you would buy the 5 times short STI DLC to make that gain when the STI corrects. All right. So whatever it is, you're bullish, you buy the long DLC. If you're bearish, you buy the short DLC. Okay, that's how DLCs work. I think how the DLCs have grown over the years, the last 5 years, is because of its simplicity. These DLCs every day will give you that 5 times performance, similar to a leverage and inverse ETF. It gives you that fixed leverage every day, in terms of the underlying assets performance, 2 times, 5 times, or 7 times, and that is a more linear sort of pricing, right? You can see that 2 times or the 5 times or 7 times performance on a daily basis. All right, compared to some of the more option type products that give you leverage, options or warrants, or these are more optionality type of products, and these can be a bit more complicated because of different factors such as the implied volatility or time decay. Whereas the DLCs are more linear in pricing, and therefore it's a bit more simpler and easier to see how the underlying asset moves equals to how the DLC will move. All right, so I think that's one of the main reasons why the DLCs have grown over the years to become a popular sort of instrument or leverage instrument for investors to use as a tactical instrument as part of their portfolio to capture short-term opportunities in the market. All right. So this is the STI, a screenshot of our website. This is the terms page of the STI 7 times long DLC, CWHW. So you can see the STI is priced at now 0.82, right? I think 7 times long, previously it was issued at about $1 level. Now it has fallen to 0.82, 82 cents. So that's the price of the DLC, right? So the DLC, you can see that the 7 times performance is where it's over here, over here where the STI on this particular day at around noon time on 20th of July, this last week, STI was up by 1.33%. All right, and so the 7 times long DLC was up by 11%. Right, so it's close to 7 times performance of the underlying index performance. That's where the 7 times come in, right? So every day it will give you that percentage gain on a close-to-close basis. All right, so you will see, you can also see our price matrix later. So that's something where you can see how the index moves equals to how much the DLC will move. How does the movement in the underlying index translates into the movement of the STI DLCs, because they are priced different, right? Your STI is at 3,000 points level and your DLC is at 82 cents, right? So how does it move in line with how many points move in the STI DLC will generate how many percentage gain or dollar movement on the STI DLC. That it will be shown in the price matrix, which I'll run through with you guys later. All right, so that's where the 7 times performance come in, and also similarly on the 7 times short DLC CZGW, you will see that there is the 7 times performance also. So this one, the STI was down by 7% because of the STI gain in value. It rose, right? So the STI gained 1.33%. Therefore, the short DLC fell in value. All right. So that's where the 7 times performance is, and this is our terms page. You have the price information over here on the website, as well as the static data for you to reference as to how much when was it listed, who's the issuer, etc. over here. Okay, so you can see how do I use the DLCs. So we know roughly what the DLCs can do for you. It can give you that fixed leverage on a close-to-close basis of the underlying assets daily performance, right? So now, how would you use the DLCs, right? So how we've seen investors use the DLCs is mainly for day trading and swing trading. And we're seeing an increasing group of people using using it for hedging, given that the market has been declining for the last couple of months. All right, so day trading is something where you buy in a day and then you close out your position within the same trading day. All right, we've seen some of the DLC traders use the DLCs effectively for day trading. We've seen some of the more swing traders or the more mid-term traders who use it for swing trading, where you hold it for a couple of days or a couple of weeks to be able to make a larger gain. So you're betting on a nice trend on the underlying stock to be able to make the enhanced return on the DLC. And also hedging. So with the market correcting quite fiercely in the last couple of months, we've seen people use the DLCs for hedging their investment portfolio. We do have our investment portfolio that we want to buy and hold forever. We never want to sell it. Be it your Tencent stock or your DBS stock or your UOB stock, you want to hold it for long-term appreciation and also for dividend, strategy. But you won't sell it. But if you do see like the Singapore banks correcting fiercely, or if you do see like the upcoming earnings coming up and you think it's not going to be a very good earnings, you can use the short 5 times DLC to be able to hedge your position. All right. So that's some of the 3 uses that we have seen people use the DLCs for. And this is just an example of the day trading. So this is an example of the 7 times long STI, DLC CWHW. All right. So the STI rose by 0.8% from 9 a.m. to just before market close at 4:45 p.m. for that one trading day on the 7th of June. So the 7 times long STI DLT CWHW rose by 6.25% within the same period. Right. So within a day, the 7 times long DLC has managed to return a 6.25% gain. I would say not too shabby for the STI index, to gain that 6.25% within the same one trading day. So that's where the 7 times long DLC is able to enhance your return on an underlying asset that would have only generated 0.81%, right? So you're using leverage here, and therefore it's able to give you that enhanced return within a very short period of time. All right. And over here on the swing trading, so this is for people who are holding it for a few days or a few weeks. And you can see that the blue and white candles are the STI index, and whereas the red candles is the 7 times long DLC, right? So you can see that the 7 times long DLC CWHW was up by 9.1% from 17 June to 29 June. All right, so that's just maybe about 10 or 12 trading days. So within a period of 10 to 12 trading days, the STI was up by 1.3%, while the 7 times long DLC was up by 9.1%. Right? So that's where the performance is in terms of the STI DLCs for the 7 times long. So you can hold it for a longer period of time, 2 weeks or 3 weeks, and you'll be able to get the enhanced return on the STI's performance. All right. And hedging, right? So hedging, the blue and white is the STI index, whereas the red and white is the 5 times short STI DLC, CVGW. All right, so CVGW was up by 24% between 1st June and 16 June. All right, so that's a very, very impressive gain on the CVGW because the STI did correct quite heavily during this period of time. It was down by 4%. So 4% times 5 times is 20%, while the DLC CVGW was up by 24%, right? So that's more than a 5 times performance that was expected. So 4% times 5 is 20%, but the CVGW was up by 24%. So that is quite, that's where there's an enhanced return due to the positive compounding effect, which I'll touch on next. So there is a positive compounding effect if you're able to capture a nice trending market over here. All right. So this way you can use to hedge your portfolio. If you think the STI is going to correct, you can use the CVGW 5 times short STI DLCs to be able to make some gains to offset the losses on your long-term investment portfolio in the near term. All right. And so the compounding effect, which I touched on just now, right? So how did that 24% come about? Is because of the compounding effect. All right, 4% times 5 is 20%, but this one is 24% gain on CVGW. It's because of the compounding effect. If you hold the DLC for more than one trading day, you'll be able to make the enhanced, you'll see that compounding effect will kick in. And you could work for you or against you, the compounding effect. If you are able to capture a nice trading market, then the compounding effect will work for you. But if you're not, if you happen to be stuck in a volatile market or a sideways market, then the compounding effect might not work for you. All right. And so it's best explained through this illustration over here and this table over here. So if I look at the table on the left, the underlying at a value of 100 points or $100 gained by 1% on the first day to $101, followed by gain another 2% on day 2 to $103. And then on the day 3, again by another 2% to $105.08. And that's a total gain of 5.08% over the 3 trading days. All right. And the 5 times performance, 5 times DLC, similarly, on a close-to-close basis every day, it will give you that 5 times performance. So on day 1, it generated 5% gain to rise up to $2.63. Second day, it was up by 10%, because 2% times 5 is 10%. And on day 3, it gives another 10% because the underlying was up by 2%. So every day you get that. So that 5 times performance of the underlying. So 5% first day, second day 10%, third day 10%. Overall, it was up by 27% over the 3 trading days for the 5 times DLC. So 27% over there. 5% times 5 is 25%, but this DLC generated 27%, right? The extra 2% is because of the compounding effect. Every day your gains and losses are locked in, all right? So you can see that on the second day itself, the 10% gain that was on the DLC was off a higher base of $2.63. And then on the third day, the 10% gain was off a even higher base of $2.89 to give you to end off a value of $3.18. All right, so every day your gains and losses are locked in, and therefore the gains that is compounded. If you manage to capture a nice trend, whether it's an uptrend or a downtrend, you'll be able to have that positive compounding effect. All right, and you're able to make more than that 5 times return if you're using a 5 times DLC. And that's the good thing. That's when the compounded return can work for you. But in a volatile market or in a sideways market, that's where the compounding effect might not work for you. Because every day, similarly, your gains and losses are locked in. So let's look at the table over here on the right. On day one, the underlying is up by 2%, 202. Day two is down by minus 4%. And on day three, it's up by 7.31%. At the end, the underlying is also gives you a similar return of 5.08% over the 3 trading days. And similarly, on the DLC, every day you get that 5 times performance, right? I mentioned that leverage is based on a close-to-close basis. So on day one, you get 2% times 5, you get 10%. Minus 4% times 5 is 20%. So the DLC decline in value by 20%. And on the third day, plus 7.3% times 5. So you get plus 37% on the third day. All right, but overall, over the 3 trading days, the DLC only generated a return of plus 20%. All right, not the 25%, 5% times 5, 25%, not the 25% that you would think that the DLC would generate, right? So it's important to note of this compounding effect. This 20% gain is also because of this underperformance is because of the compounded return as well, right? Your losses are locked in on day 2. So on day 2, the minus 20% gain, therefore your DLC fell to a value of $2.20. And even the third day, even with a big jump on the third day, plus 37%, it is based off the lower base of $2.20. Therefore, it's not able to give you that plus 25% or go back to the same level as easily, all right? Because of this, where the losses are locked in already on day 2. So it gives you only a plus 20% gain as compared to the underlying plus 5% times 5, 25% gain that you would have expected. Okay, so in a volatile market, the compounding effect doesn't work well for you. But in a strong trending market, the DLCs will work very well for you. You will get more than that 5 times or more than that 7 times performance of the underlying asset because of the nice uptrend, and every day your gains are locked in. Okay, so this is important to understand as well, because when you trade a DLC, it's important to understand the trends. Must have some conviction in terms of whether you think this is going to be an uptrend or going to be a nice trend in the market, or is it just going to move sideways, right? If it ends up moving sideways, it's so important to exercise discipline, to cut losses, make sure that you do not hold the DLCs for too long a period of time. And the compounding effect is also a reason why the DLCs are not meant to be held for a long period of time, because in the long run, half a year, 1 year, 2 years, 3 years, whatever that goes up will come down, whatever goes down will come up, right? Eventually, all right? So there will be that mean reversion, etc. And therefore you might, in the long term, you might just see like a sideways market, and that's where the DLCs won't work for you because of the compounding effect. But in the short term, and you're able to capture short-term trends in the market for a few days or a few weeks, you'll be able to make that nice enhanced returns due to the compounding effect. Okay, there's more information on our website on the compounding effect, and I cannot stress enough that if you are looking to trade the DLCs, it's important for you to understand this feature of the DLCs, and it's something that's unique to the DLCs. And it's very important for the DLCs. So please do take note of that. If you are trading the DLCs, please read up on the compounding effect and how it can work for you or how it can work against you to fully understand how the product will move in line with the underlying index or underlying stock. Okay, so this is just an example of positive compounding. So in these STI between 18 trading days, between 1st June to 23rd June, the STI was down by minus 4%, while the STI short DLC, 7 times short DLC CZGW was up by 32%, right? So it's more than that 28 or 29%, 7 times of performance because of the positive compounding effect. And on the STI short DLC, in a volatile market, it didn't perform well. This is an example over here. So STI was down by minus 2.86%. You would think that 3% times 5 times 7, you will get 21% gain on the STI short DLC, 7 times short DLC, but you only generate a return of plus 16.5% because of the compounding effect in a volatile market. All right. So, and this is over 28 trading days. So the longer you hold it for, the more you should be aware of this compounding effect on the DLCs. All right. Okay. And I think just a few more points about the other features of the DLCs, basic ones. Before I move on to the practical part of our sharing today on the website, to give you guys a tour of our DLC website, dlc.com, where you can see all the tools and information that you can use to trade the DLCs. All right, so cost and fees wise, I think that's one of the common questions on the DLCs. So the cost and fees is not charged to you separately, etc. It is priced into the DLC's bid and ask code. We do not charge anything on top of the bid and ask code. So every day we will publish intrinsic close value, which I'll show you on the website later. So this intrinsic close value will incorporate, it's like the mark-to-market value or fair value of the DLC at the end of the trading day. And this value will incorporate the daily costs, daily overnight cost that is charged, and be deducted from this to derive from the price of the value of the DLC to derive the intrinsic close of the DLC. Okay, so that is the overnight charge. That's if you hold overnight. All right, so if you hold the DLCs overnight, then there will be this charge that will be priced into the DLC bid and ask code. But if you buy and sell the DLCs within the same trading day, like you're the day trader, which I mentioned, and you buy it in the morning and you sell it in the afternoon before market close, there is no overnight cost. All right, so you're not charged overnight, and you'll get and the only charge that you will have to incur is the usual exchange fees as well as the commission by a broker. So these are the common sort of charges for even when you trade stocks, etc. You'll be charged exchange trading fees as well as your broker fees. But take note over here, the exchange fees, the trading access fees, and the clearing fees for the DLCs is 8 times cheaper than the stock, because I think SGX realizes that this DLCs it's not a buy and hold product. It is more of a short-term trading instrument. Therefore, they are also willing to lower the fees on these DLCs over here. All right, so it's only at 0.5%. Oh, sorry, 0.5 bips on the DLC for the exchange fees. All right. Okay, so this is the example. I will not go through too much on this one. Airbag. All right, so airbag mechanism. Every single DLC has an airbag that is inbuilt into the DLC itself. And it's designed to reduce the actual exposure of the DLC in terms of adverse movements in the underlying asset during the day. All right. So just need to make sure that this DLC is meant to be triggered only in adverse market movements. So for every single DLC, have an airbag trigger level. So for the 5 times and 7 times index is at 10% level, whereas for the 2 times DLC is at the 30% level. All right. So that's only when the underlying index moves by 10%. Then you will see that the DLC will move, the airbag will be triggered for the DLC. All right. And it only triggers on the side that goes against you. So if the index goes up by 10% and you bought the long DLC, you will be sitting on gains. It will no airbag will be triggered. But if you bought the short DLC, then the airbag will be triggered, and you'll be able to have an intraday reset, and the DLC will be suspended for 30 minutes before it resumes trading. All right. So I will not touch much on the airbag mechanism, but please do read up on it on our website, and I'll show you where later on. All right. All right, and this is something for you to see. Okay, I think I touched a bit on this just now already as well. Okay, let's go into our practical series guide. I think that's where it's a bit more interesting in terms of website. So hang on for a moment while I switch my screen so you can see the DLCs. All right. Sorry, I realized that was on a bit of a mute. Sorry about that. So you can see over here, this is a price matrix that we have for the STI DLCs. And you can see that this shows you how does the 7 times long DLC move with the underlying index, right? So the STI moves over here. You can see the different ranges to see how does if the STI goes to a certain level, then what does the 7 times long DLC move to, right? Whether it moves up or down, you can see in this price matrix over here. All right, so today the STI closed at the 3,192 points level. All right, so and then the DLC closed at the 0.856, so it's 85.6 cents. This is the intrinsic close, it's over here. So tomorrow, if the STI DLC it goes up by say about 2%, right? So if it goes up by around 2% tomorrow to 3,255 level, then the DLC will be around this 97.5 cents level, which represents a 14% gain on the from the previous day close. All right, so 2% gain on the STI will generate a 14% gain on the 7 times long STI DLC. And then the SocGens, our bid and offer, will be at this 97.5 cents level for you to buy and sell the DLC. All right, so this price matrix is useful. And also, conversely, if the STI instead goes down by 2% tomorrow to 3,128.62 level, there's a minus 2% decline on the STI. You will see that the STI DLC will similarly fall in value by 14% down to 73.7 cents around there. So that's where our bid and offer will also be for investors to buy and sell the DLCs. All right, so you can see the different price ranges of the STI DLCs corresponding to the STI index at different levels. And that's where you can also possibly place your buy and sell orders as well using this reference. All right. So this is the price matrix tool, which I wanted to share with you guys. And going back to the terms page, you can see over here, this is the last intrinsic close. You can find it over here. Sorry, it was muted on just now, so let me elaborate again on the last intrinsic close. So this is again the fair value or the sort of mark-to-market value of the DLCs every day on the STI, on this particular DLC and for all the DLCs. So we will publish this value for every single DLC that's listed every day in the evening between 6:30 to 7:30 p.m. around there for investors to reference. All right. So this last intrinsic close will be published every day over here. And this will be used as a reference for the next day's 7 times performance. All right. Okay. And also you can find over here the costs and fees. You will see the costs and fees of the STI DLCs over here. So this is the percentage terms, but over here is the daily cost of the DLC, right? So this is the dollar value over here, while this is the percentage of the daily cost. And this is based on the DLC price over here, right? So in a sense, this dollar value of 0.00058 was deducted from the value of the DLC tonight for tonight's overnight holding cost, and that forms a 0.07% of this value over here. All right, so you can find quite a lot of information here, and you can find the historical performance as well of the STI DLC of each DLC. You can download here over here using an Excel over here onto Excel as well to see the historical performance of the DLC since the first day it was listed on 1st June. Okay, so you've seen the price matrix, you've seen the intrinsic close, and you can also use the historical compounding tool to see how the DLCs have performed. You saw my slide just now. So this is where I got a screenshot from as well. You can see over a period of time, how has the DLC performed in line with and how did it perform with the compounding effect, taking into account the compounding effect. All right. Okay, and going on to our products, our education tab. So this is where you can find more information about the DLCs, how it works, and more information about the compounding effect as well, which I stressed on just now as well. More examples for you to look at, and also the Airbag Mechanism, which I touched on just now as well, to see, for the 2 times it's at 20% level over here, and you can see the different trigger levels for the Airbag Mechanism and how does it work over here with more illustrations over here. Okay. So quite a lot of resources here on our education tab. Hopefully able to have a look at it. If not, you can also look at our videos to watch how does the DLCs work, and some of the how do you trade the DLCs and what's the compounded return if you prefer to have to watch a video about it. And the last tab on our website under the markets tab is where you can see very interesting insights about the market. What the fund flows like on the DLC, whether the DLC who have been buying the short DLC or has been buying the long DLCs over the last trading day or even the last 5 trading days, you see who have been buying what and who have been selling what. All right. So this is quite interesting, and you're also going to see the DLC long short ratio. You'll see how many people are long the signing article, how many people are long the Gili Auto, or even the DBS. Let me see if I look at DBS. Okay, so people are still more long the DLC, the long DBS DLC versus the short DBS DLC. And with earnings season coming up, so you can have a gauge of what are people buying or selling ahead of the DBS earnings result that's coming out in early August, or the 3 banks. You can even see for the multiple ones, you can see UOB for DBS, UOB, and maybe OCBC. So you can see these 3 over here. Oh, okay, and we have more short positions on OCBC versus your UOB or your DBS. So this way you can gain some interesting insights about what people are buying and selling based on the underlying and the DLCs. All right, and you can also see some of the fund flow data. This is the Singapore fund flow data. It is published by SGX, but we just made it into a bit more user-friendly format for you to see over the last 3 weeks who have been buying what, who have been selling what. So we see that in the last 3 weeks, Insti has been buying the STI, the DBS stock, whereas retail have been also buying the OCBC stock. And rather the DBS, are they selling the DBS? Yes, they are selling the DBS for retail ahead of over the last 3 weeks. So nice, you can choose different kind of underlyings as well. And you can see for the Hong Kong SGX to South Hong Connect as well. See which one are the top most traded stocks on the Hong Kong stocks, South Hong Connect stocks, and choose which stock you want to see over the trend as well, the trend over the last couple of weeks. All right, so product stat to search for what kind of DLC, what the DLCs that you want, to be able to gain more insights to see how does the DLC move with the underlying index or the underlying stock. The education tab to brush up on the different features of the DLC, your compounding effect, your Airbag mechanism. Please be aware and please understand the features before you trade the DLCs. And lastly, the markets one to gain more insights into what people are doing, whether they're buying, selling, and what people are trading, to be able to see which underlyings might be something that you want to look at. All right. Okay, so we do have quite a lot of information here on the DLC website, and the most important information is the DLC hotline over here. All right, at the top right hand corner, 62262828. So that's our hotline, where my team and I were on standby during the SGX market hours to be able to answer any calls, any questions, or any feedback that you have on the DLCs. Please do feel free to just give us a call on this line, 62262828. And if you're a bit shy on the phone, you can also drop us a note over here under Contact Us. Drop us a note, tell us what feedback you have or what underlying you want to see on the DLCs. We'll be sure to respond to you. So that is the most important part about the website. It's a means for a two-way communication between you guys out there as well as us as the issuer and the designated market maker. Please do drop us a line or a note if you have any feedback or any questions on the DLCs. All right. If not, thank you everyone for this evening's short session on the DLCs. We do have heartened to celebrate 5 years of DLCs here on SGX. We do have a nice sort of recap of the last 5 years we've seen on the DLC. Hopefully you'll be able to see this as well. You can click on the banner on the home slide, you'll be able to access this nice animated webpage to show you how we have grown over the last 5 years on the DLCs and how we are committed to further development of the DLCs here on SGX Securities Market, here in the local Singapore market. All right, so thank you very much, everyone, for joining me this evening for this session on the DLCs, focusing on the STI DLCs we just launched, the 2 times, 5 times, and 7 times DLCs that we've launched, and we look forward to seeing more people adopt the DLCs as part of their essential instrument or tactical instrument as part of your overall portfolio. All right, you might not want to even as a leverage instrument, so position sizing is very important. But I think that the flexibility that it gives in the long short direction with the with the leverage factor for enhanced short-term return, will be something that's very useful for investors, especially in this kind of markets now, which is more volatile. So you might see short-term opportunities and no other better way to be able to capitalize on these opportunities than using the DLCs. All right, so thank you everyone, and hope to come again next month to share with you guys what's the latest developments on the DLC space. Thank you everyone.